The changing landscape of the housing market in Las Vegas requires a real estate professional that understands how to get your offer accepted, willing to go above and beyond for service and accountability. Hi, my name is Dan French. I've been in the real estate and financing industry for over 13 years. Most real estate agents struggle with answering their phone. Please call me directly, 702-557-6176. I'm available for all your real estate needs.
Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
Hey, what's going on out there, Las Vegas? This is Dan French, the French Workbench Podcast on a Saturday. We're here drinking our coffee, getting ready. Brett's doing other things.
Oh, here he is.
Oh, Duggar's back in the office here.
Sir.
And you guys know this is the most real behind-the-scenes information on financing, real estate, money talk happening here in Las Vegas. I'm your host. With my co-host, I'm Dan French. We also have Mr. Brett Jenny. Ladies and gentlemen, Mr. Brett Jenny.
Everybody, Dan, how you brewing?
How are you brewing, man? You know, I saw you just
brewing all right.
disappear and you went out to the car. What were you doing out there?
I was taking a moment of silence for all the real estate professionals.
You guys know Brett Jenny, man. He's another real estate agent out here. He's from Simply Vegas. He's out there in the trenches, just like myself. Anything new happening in your world?
I was supposed to have a bunch of showings for one of my investors, but they had to cancel at the last minute because the husband has COVID.
Oh, wow.
So double shot and boosted.
Wow.
How does that happen?
I don't know. No, so they had to cancel, so now my weekend's kind of free. So.
Dude, and we're going to talk about these people because you got some people out here that are still buying and they have just a different mindset. We're going to kind of shift a little bit. A lot of times we talk about the first-time home buyer. That's what we deal with quite a bit, right? Or even just the primary residence home buyer. Sometimes you just buy a house or just put money into something because of the store of value, potentially what you see. So we're going to talk about that, right, Brett?
Absolutely.
Also, we have Mr. Doug, Doug or not.
Good morning.
What's up, buddy? How are you?
Yeah, running behind the curve a little bit.
Nah, man, I got you.
Right on time.
I had some. You know, I was gonna put like a dummy right there, just not a dummy or something, but just like somebody like.
You got me. What do you need that for?
No, like put a hat on.
Like
you know,
the
just
crash test dummies and the car commercials they used to have.
Be like, Doug's over here. We're
Right.
gonna get to him in a second, but it wasn't really like that, you know. But we're gonna try to like really kind of
Stand in.
stand in.
Yeah, okay.
We need to just stand in.
A blow-up
All right.
doll.
Yeah.
Doug's
Wait.
probably.
Another
Doug's actually
conversation.
probably smarter than all of us, so we're,
His wife is.
Yeah.
and we should get her on the show, man. She needs the
We,
host.
we actually should have her on here, man. What do you think about having your wife on?
Oh, yeah. I don't know. I could ask her.
Dude, have her come on, man. She'd be like,
She
you know,
doesn't
you
wanna hang
guys
out
just, you just said that wrong.
Yeah.
You know what I mean? You got to say this better. Or and
No,
no,
she's not into correcting.
no.
No, she's, she does what she does, and then you do what you do.
Yeah.
Yeah.
That's,
So, what's
that's
going
cool,
on in
man.
your world,
Yeah.
Doug?
Well, that's why you're married.
What's happening in your world, Doug? Dude, isn't that weird? Like you get a
Love you, but
Yeah, exactly. So what's going on with you, man? Anything new?
No, I blew my carrier bearing last night in the truck.
so what is
That
that?
sucks.
What is
is
a carrier
that?
bearing? What is that?
That's like a left field. Like I blew my I thought he was gonna say I blew my kneecap out or something.
Nah,
or-
I got 60 chassis and that's some bitch right there. We reared her up. Lots of muscle.
That's the lifeline to your drive shaft, basically.
Oh.
Yeah,
In your truck.
keeps your truck going. Yeah.
So were you like swerving? I
No.
mean, what was going on? Oh.
It started.
You got swarm on.
I was laying dope.
Hey, you were leaning, right?
Yeah,
You were leaning.
Ain't gonna catch Doug riding dirty. Ain't gonna catch him riding dirty.
So, man, a lot's happening in Las Vegas. You
Yeah.
guys know, man. There was we had somebody that hit the lottery, right? $1.3 billion.
One person, I heard.
One person. You know what the odds
Last
were?
night they did?
Yeah. The
Yeah.
odds was 1 in 300 and something million. It was like a little over
Yeah.
300 million. Man, I hope that guy or whoever that is that has that money spends that money wisely.
Well, I tell you what, it's like 90% of lottery winners wish they would have never won it in the first place when
I
it's
was
all
just
said
going
and
to
done.
say that. Yeah,
Dude.
most of them lose it within about 5 years.
Dude, and then all the vultures coming in.
Yeah.
1.3 billion dollars. I mean, I don't even know what I would do with
You know,
that.
it was 1.3 billion.
Yeah,
Yeah.
it's 1.3
billion.
billion.
Think about giving up like 300 million in taxes.
Hey, but who cares?
Don't tell me I didn't pay my fair share.
Yeah, right?
like what would you
So
guys?
that's only $900 million, I guess.
What would you guys do if you hit something like that? Because look, there was people that were out there standing in line at the
Yeah.
and they were
So-
standing for hours.
Dude, and it's in the heat and they're standing in the middle.
Some people, it depends. I think it depends on where you come from when you win that money. Because if you're like an entrepreneur or you got an entrepreneurial mindset, that thing's going to set you up for the rest of your life.
Well, you already are. Like, what's the point of even thriving businesses? You're set for life.
No, that doesn't. I'm talking about the mindset.
Oh yeah. Well, I know, but
Yeah, because there's a lot of people that go out there and they buy their Maseratis and Ferraris and mansions, and then all of a sudden they're paying taxes and they're going out and partying and having a good time, and and they don't really, the fun never ends, party.
Doesn't need to with $1 billion.
Well,
Keep the party going.
Well, I mean, I'm sure the IRS will figure out how to take most of that.
Well, they'll take, they're good, 35% at least. And then
40 if you're not.
Okay, so take 40% off of that, worst case, and then also take into account that, to me, personally, I just take the one lump sum.
Yeah.
I mean, what's the point of getting,
right?
So I just get, so then you get less of it because you take one lump sum.
Right.
But still, at the end of the day, I mean, you got to have like half $1 billion or something, right?
Yeah. Well, you know what the lump sum was?
I have no idea. But at the end of the day, you're still what, 400 or 500 million up?
Maybe 400 million up. Yeah.
Oh, geez. I don't know if I could. It's gonna be hard to try to make that budget within my lifetime.
With the way inflation's going up, you need it, I guess.
Well, so I would not know. I mean, I'm sure I would be having a yacht. I mean, everybody's got these goals.
Oh
right?
yeah, you got
I don't
dreams.
think I would.
Hell yeah, yeah.
You wouldn't do a yacht, like you wouldn't just like, hey man,
I mean, you know what? I might buy a yacht just to say I have a yacht, but I don't think I would.
You're not a sailor.
Really, I'm not really. Yeah, I'd be more like I'd buy like a mountainside. Or I'd buy a golf course. Like I always golf with my buddy all the time. It's always crowded. I said, dude, we need to like get ultra rich so we can buy our own golf course.
I'd build a golf course.
Oh my God, wouldn't that be awesome? Have like a Pebble Beach, but just for you. It costs you like 100, like 20 million a year. Who cares? Like it's just your own course.
You can open it up. You can yeah. I mean, you can do it. There's a lot you could do.
That's what I would do.
See, that's the thing is you have to have an entrepreneur mindset.
That's because I was like golf, and I could. That's what that move would be all about.
So would you guys go out and buy houses?
Oh,
I mean, listen.
I was like, I don't know.
I mean,
about
you know
that.
what? You know, I would any kind of investing that I would probably. I would say I would invest because I know, like, I had a buddy in college who graduated and he took his Series 7s test, became a stockbroker.
Yeah.
And he handled Bill Gates's one of his accounts.
Okay.
And the whole point of the account was to invest the money, and all the money made off that investment went right to his charities.
Oh, okay.
So to me, it's like I could probably make a lot more of an impact with a lot of charities.
Yeah.
By investing the money and sticking that into the charity as well, because I mean, if you can hit say 100 million in charity, you can get 300 million to a charity is even better. And at that point, what's it matter if you got 4 or 5 million for your 4 or 500 million for yourself?
Absolutely.
Yeah.
You know.
Yeah.
Absolutely. Also, too, you guys out here in Las Vegas, a lot of people out there were worried about the pandemic and would the nightlife happen and would it recover? And there's a lot of good, positive things happening here with the casinos, and you see a lot of the nightclubs.
Did you see the Circa had a leak? Yeah.
Circa had a leak?
I saw that in the news. little bit of a leak.
A little bit of a leak, yeah.
Was that part of the show, though? You know what I mean?
It could be.
It's Vegas. You just go with the flow.
Yeah, man. It's like, hey, Circa with some water.
Yeah.
What do you know? Maybe they wanted an atmosphere thing. I don't know.
It could have been like waterfall, water feature. Yeah, kind of.
Dude, I can say this. So the nightlife apparently has come back strong, and there was a lot of people thinking, a lot of people thinking like, oh no, it's not going to happen. Look, people are spending money, and I'm going to just say this, right now, yes, there's inflation. There's some stores that have things that they can't sell. They have an excess of things. Obviously, necessity stuff that's going to go off the shelves. But
Right.
there's some things on the shelves that these stores have overstocked on. People are still spending money. They're just being a little bit more cautious. A lot of people out there too think that from the eyeball test, we are in a recession. Now the Fed came out and stated that we're not in a recession, right? They kind of say, nah, we're not really there yet. So I want to talk a little bit about what's happening with the Fed today, raising interest rates, the short-term bond, also what's happening with the housing inventory across the country. We're starting to see an increase in housing inventory. And I'm going to talk a little bit about what we see here in Las Vegas. So you could look at the housing prices, and looking at the housing prices, the sale price, the national-wide sales price in June was 11.2% increase. So we're still higher, right? We're still seeing, some signs that people are still buying homes. It's just not the alarming rate that we saw. What was interesting is San Francisco had a decrease in the median price sale by 0.5. And so it just shows you, hey, the average home in San Francisco is like $1.5 million.
I know.
I was like,
Yeah.
man, that's the start. That's like here is like 4, 7, maybe
So
5.
imagine your starter price of 1.5 to walk outside and having homeless all around you.
I know. Have to avoid stepping in the shit.
Yes, please. Yes, please. Where do I sign up for that?
And then you got Florida. Dude, Florida's on fire. Florida's like 29%.
Yeah.
Not missing a beat. So there's
Right.
something going on down there in Florida. Somebody's
Right.
drinking.
It's warm.
Well, it's warm. I mean, but there's humid.
Well,
is
They're
it really that-
pro-business.
The other thing I saw was the Chinese are coming in and starting to invest heavy on the West Coast
Yes.
and through the Midwest and into Florida.
Yep.
That's
That's the thing.
That's
At the
kinda
end of the
interesting
day,
right
that's where. So it depends. The housing market, it depends on your situation. Is
Yeah.
If you're an investor, you need somewhere to park your money.
Yeah.
And in a
And
sense,
it doesn't matter
Yeah,
what
in,
the
in a sense,
price is.
in a sense, cash is trash.
Yeah.
I mean, what are you going to do with it? Stick your money in the bank and let it lose purchase power every single year? You have this money. You need to park it somewhere. So real estate's always a great. Well, at least that's what they're doing right now. Is they're sticking it in real estate.
Yeah.
So even if the market does go down a little bit, which it may, and it probably will a little bit, it doesn't matter because after every downturn is an upturn.
right.
So if you're going to hold on to it for 2 or 3 years, you need somewhere to park your money. What other options do you have? I guess a few other options, but
Yeah.
So the national home price, like I said, is 11.2. But then you look at home sales declined by 16% year over year. So you're seeing it was 20% May, 20% in April, right? And now
for
you
what
get
home sales?
for home sales. June is now 16%. So you're seeing the decline. You're seeing the softening of the market. And from the eyeball test, I think a lot of people are saying, well, nobody that's an American out there is going to go and say, well, we're going to do some data research. Like we do that because we're in the industry of real estate lending. But nobody's going to do data research. They're just going to watch a brief clip of what the news
Yeah, of
says
course.
or whatever it is. And then they're going to make their determination off of their own personal experience, not what the economy's doing.
Right.
So I think a lot of Americans right now already felt we were in a recession, which, by the way, it came out and stated that there was retraction of 2 quarters. Definition
Which is
of recession.
technically-
Now, there's other data besides that, right?
Sure.
Is the health of the economy. Do you guys feel that even though we've increased and we were on fire, maybe part of this is because of the pandemic, the monetary policy that's going on and things that they're putting out?
That's absolutely what it's from.
Well, let me say this. Is it healthy or unhealthy? Because I could have an argument that it's actually not an unhealthy market.
so what,
People think it's
what,
unhealthy.
What question do you have, or what scenario you're posing, healthy or unhealthy? As
Well, what
in
I'm
relation
saying
to
is
what?
this.
What's the question?
They're saying it's unhealthy to have a retraction for GDP, right? Gross domestic product. This is what they're saying out there as far as how the economists look at the markets. I'm saying, well, maybe it's not so bad because you can't keep going up. And
That's
Secondly, this is coming after a pandemic where people were pent up with money. They didn't travel, they didn't do things. They're living things like they're living life now. Same with like what's going on where you look at the investors. We have a war technically going on with Ukraine. We also had the Fed's fund rate raise another 75 basis points, which is the first time this happened back to back since the 80s when Magic Johnson was running with the Lakers, right? Where they did 75 and all of a sudden they did 75 again at the next meeting. So why is that important? It's because investors still, the following days, invested significantly into riskier assets into the stock market. So people are like, you know what, I'm numb to it a little bit, right? And markets seem like they come back. That whole transition of, hey, once that happens, we're gonna come away from putting our money in the bond market. Investors don't care. Buyers out there that see this on a day, like I said, the eyeball test, they're still spending. You guys see it in the markets? What do you see?
I think the Fed's main goal is to keep unemployment low and keep the inflation rate at 2%, right?
100%.
And so our inflation rate is still really high. I think you got a lot of people out there. I think you got a lot of turtles out there, man.
Explain turtles. Like, is it Ninja Turtles?
I think you got a lot of people that have a shell that are protecting themselves, and I think they're not moving ahead as fast as I don't think they're moving forward as fast as they want to go. I think you got a red light, green light type of thing, yellow light.
Well,
I think you got the economy in yellow light right now, waiting to see what happens with the economy. I mean, because you're right. People are spending money, and that's probably why the Fed said, oh, it's not really an inflation. I mean, it's not really a recession, but it is technically a recession. But they don't seem like they're really doing anything to fix it. You know what I mean?
I think everyone has forgotten what normal is.
I think so. And that's the thing of the pandemic, right?
Yeah,
that's
so
the pandemic
when
thing.
the Fed says it's a bad thing for it to have a retraction like that, well, like you said, things can't continuously go up. So, I mean, to have things come back down to earth and normalize, this is what our normal market should be like. So it's not that,
what's the aftermath? That's the question. The question is,
we're going to see.
Yeah,
I don't think it's going to be, I don't think the aftermath's going to be nearly as draconian as everyone thinks it's going to be.
Right.
I think that we're going back to a normal market. And I think that when they raised the interest rates like they did, it just shocked people and scared people, and humans just automatically react to anything like that that's kind of abnormal or huge. It's the same thing like any kind of policy that they want to enact, they have to do in implementations, slow stages, because if you just go right that at people, we can't handle it. So now people are just kind of stepping back, they're observing, they're saying, okay, well, we're not seeing things quite crashing, but I'm still not sure of if it's going to go down a little bit. How much so? But I think a lot of the kind of dramatic world coming to an end attitude is starting to soften a little bit. And, it just needed to happen for us to kind of come back to a more normal market, what we're having right now.
Well, I think a lot of people that I see that's on YouTube and all these things where you see the dramatic, right? I'm just saying.
It gets subscribers that have a doomsday
world.
world.
To click. It's clickbait,
it does.
right? So I understand that. Now, if you're looking at the average person that doesn't go there for their media, they go to the news. And I'm not saying even the mainstream media news. I'm just saying maybe they go on their phone and they see a clip, right, from some social media outlet, right, Facebook or Instagram. That's a lot of people start to, kind of, oh, this is what's going on. When people go on there, they just do like local news or whatever it is on YouTube. They're not going to go and do all this research. So for this happening, I think this is having a huge impact on psychologically what people are doing when buying a house. Yet I know you have people that are out looking for a house right now, and they're saying, every time that I've bought, even if this market's declining, even if we've had a situation, and this is not a biased thing, some people think this way. There's nothing wrong with that, right? Talk about your client.
Yeah, so one of my main investors, she's bought for me since 2010, 2011. And, she's sold her house and some of her homes in 2014, 2015, way before it was like a huge seller's market.
Does she keep them?
Yeah, she keeps them. She rents them out.
Okay.
And she holds on to them for anywhere between a minimum of 4 years to, I think she's held on to them in 10, 11 years. She has a couple still right now. Wow. But point being is, like, she just sold a couple properties in Hawaii. So now she wants to take that money over here.
I've got people that are doing 1031s too.
And I was having the talk with her the other day. I'm like, hey, you need someplace to park your money, kind of what I was just saying earlier. And she kind of stopped me in the middle and she's like, listen, you don't need to have this conversation with me, Brett. I get it. She's like, every time that I've bought homes, even if sold when it wasn't a seller's market, I've made money.
Yeah.
Every single time.
Yeah.
And so that's what she does. And she has no problem moving forward, even with the interest rates being higher, because it's a little different with her because she can either do cash or a hell of a down payment. But regardless, she has no problem moving forward in this market. Even if home prices go down some, it doesn't matter to her because she's still going to be able to rent it out and she's going to hold on to it for a minimum 4 to 5 years.
Yeah, property's king. Man.
And she makes every single time that she's done that in the past 15 years, because she started doing it obviously before she met me, she's made money. Really good money.
Yeah, and so here's where I'm at is everything out there right now is saying, go to your seller, tell them to sell now, because if you don't sell now, you're going to miss it all, right? You better sell your house immediately, fast, quick, get into this as far as the selling part of it, listing somebody's home. And if you've waited, don't think you're going to get, what you can expect, let's say in the previous, let's say even back to January.
You're not going to get multiple offers over list price.
When you're out there and you're talking to these sellers, are you telling them, hey, you need to get this thing sold quickly? Because I think, including I am, I'm like, look, let's market this thing well. We're going to put you out on, you have to work, and I've been saying this now for previous shows.
The first thing I do is find out what their situation is. That's the very first thing.
Okay.
Because my advice on what you do in this scenario might not be conducive to what your scenario is. So if you're something where, hey, you know what? Our son's going to be graduating college and getting married here by the middle of next summer, and we kind of want to get our things together and do what we need to prepare for the house and put it on the market and sell. And they can take their time and they can go about it more of a pace that they want because they have the flexibility and the money to do so. Then I would say, hey, let's put it at top end of the market, see what we can do. You've got a couple months to wait. As long as you're willing to drop the price if need be, if it's not selling, Other people who say, hey, listen, I got to get the F out of Dodge. I've got this situation going on. They'll say, well, here's everything that's selling in the neighborhood. If we put it a little bit here, you're probably going to get the most offers and it's probably going to sell right away just because of you're selling a little bit cheaper.
Because that way,
it really depends on what your scenario is.
Yeah.
So I want what's best for your scenario, and everyone's scenario is different. So the very first thing I would do would be, tell me about your house and tell me about your scenario.
Right, exactly.
And approach it from there.
What do you see out there, Doug? I mean, you have any input on that?
Well, I think I see homes sitting that like in our neighborhood. I see them sitting quite a bit longer than
really.
Yeah, they. I think one's been sitting for about 2 months now.
But you're in that $2 million range, right?
No, no, I'm in
ultra luxury.
Come on, dude, he's more like 10.
Yeah,
he's that ultra luxury.
Yeah, right. I think that one is probably in the 600,000 range, 500,000 to 600,000 range.
Wow, really? That was like the core of where 600 to 800, maybe 850.
Yeah, and it's a single story. It's on the. I don't know if that one's on the golf course or not. I think it's just up from the golf course, but. I think they've got neighbors behind them, but in any case, I mean, they went in and redid it, and it's just been sitting. I've seen people actually on my way out. A lot of mornings, I'll see people going in and looking at it, but it's still got the.
So here's what happens when you have one house that comes on the market every 3 months in a neighborhood like that. Then everyone says, "I've got to get on it right away, and I've got to buy it right away. No questions asked. We just got to get in the contract." When you start to see house after house in that neighborhood, and you start to see more homes come on the market every single day, prices drop every single day, the mentality automatically switches to, I've got a little bit of time now.
Yeah,
I'm going to take a little bit of time now. I don't have to be at a rush.
There'll
and
be
they just
another
automatically,
house.
mentality-wise, move to the, I've got time now to kind of, observe a little bit and see what I want to do. And they're not nearly in the rush. And while they're making that decision, everyone's kind of switched to that mentality. A house is going to sit there longer.
I think you're right, and I think people have overcome the fear of missing out.
Yeah.
I do. I think because it's like, what's next kind of thing, and it's like the whole everybody's on the caution light,
Yeah.
And,
I want to get into a couple of things here. So first off, let's get into a couple of the questions that I have here. And first one says, Kismet stated that Brett went out. He's get his CBD oil out in the car. Is that right, Brett? You went out to get that?
That's right.
Also, I want to bring up, you guys, if you guys out there have any questions about anything going on in the market, please, we want you guys to interject and get some, be a part of the show, right? We want you to be a part of this camaraderie that we feel we've branded here at the
Brotherhood
FWB. And so let's go over here. Yeah, the FWB. Like not FUWB.
FWB. Friends with I don't know about that, brother. Friends with benefits?
Oh, yeah.
All right, so it says, let's go over here. So, Brett, let's see. Vera Star, by the way, Vera, what's up, buddy? 1.2 billion, yeah. That's crazy numbers. Also, all you need to do is take it out and put it in the stock market and live off of 4%. Hey, that's a good analogy right there, you know. You guys have any questions out there? Like I said, we're going to answer these questions. Also, let's go over here. So running at altitude, what's going on running at altitude? We won $10. What is it? Oh, $10 in Mega Millions lottery. Please respect our privacy as our family decides on how to move forward. It's a pivotal moment in time. Hey, that was good.
Time to get those bodyguards, right?
Hey, man, he's setting up. He's retiring.
Oh
so
God,
what are you going to do? You know.
Man.
He also stated that $3,000 plus a month payment for a cookie cutter home is beyond ridiculous. You got any input on that, Brett?
I agree. I mean, it's like here's the thing. It's not like I'm for home prices going up and people paying more money. I live here too. You know, I live in a house here too. I mean, what goes up for everyone else goes up for me too. So, and if you think about it, it's actually really crazy. I mean, I started 17 years ago in 2005, and I remember selling a $500,000. And granted, it was Wisconsin, you know, but
boom, baby.
I would sell a $500,000 house, and I thought I was like the king of luxury.
Right.
Oh, he was popping his collar.
Yeah.
I know. Brett was.
So I mean,
he was blinging.
The fact that that's the starting price in now, 17 years later, that's like the starting base price is insane in itself.
But my first house was $98,000.
I mean, it's real, but it's just insane.
And the house that I'm living in now, I saw them being built. It was built in like 95, 96.
Yeah.
They're $325,000.
You remember thinking, holy, like,
son of a bitch.
I gotta like make movies to live in there.
I know. Who can afford a $300,000 house?
Yeah.
You know?
It's
and then all of a sudden, you know, times are what they are.
And now we're so
that's
used
where
to it.
living,
I'm like, oh,
you know?
550? You know, it's not even.
Yeah.
But that is high. I mean,
yeah,
you know what's weird too is like the mindset. And real quick before I get onto this subject and topic I want to talk about, I want to give a shout out to John Chapelo. He's here on the show, so give him a shout out. Want to say this is that the mindset where people are at is it's not the fun part anymore, like buying a house. Like everybody was all about it, right? Inflation. Everybody was all about entrenched in data and information and watching shows like this. Yeah,
they had shows on Sunday mornings with all the home shows on Sunday morning.
Man,
you know?
I tell you what, this town can't always be sunshine and hookers.
I thought that was blow.
Right. Where do you go for that, Brett?
Sunshine? I just live here.
The audience wants to know, man. He's like, never mind.
I'm like Ryan and Altitude. I'm a private person. Me and Ryan and Altitude hang out. We're private people.
Right. So anyways, let's go back to talk about the Fed and what's happening with this market. So I feel that, okay, the questions I get a lot is, from your opinion and also your experience, Dan, the ones that are in the market, there is still people buying. It's not everybody wants to buy, and we get it. Where are rates going to go? Okay, and there's mixed feelings about it. Economists think that, well, if we go into a recession, then we're going to stop, right? Well, technically, we've gone 2 quarters retraction. Okay, you can say technically we're there. But if they don't go into recession and we keep going down this road, then they're going to have to keep raising the Fed's fund rate. They're saying that, some economists are saying that we can go to 6, 7, maybe 8%. What are your guys' feelings on this? Do you feel like we've plateaued on interest rates?
You remember what Jim Cramer? You remember Jim? You know that,
Yeah, I know Jim Cramer. Why not? Yeah, I know him, man. We used to hang out that son of a bitch back in the day.
You remember what he did before the economy crashed last time?
No.
He was saying,
like in 06, 07, 08.
Yeah, he kept telling.
I remember him freaking out when the stocks were going. He was like, "What is going on?" Like he was freaking.
Yeah, because he was telling everybody to get in, everybody to buy. There's no problem. There's no problem.
Huh?
Do you remember that?
No. But
yeah.
There you go.
Yeah, and it's like it's almost like you don't want the curtain pulled on you, and I think that's where the caution comes in.
Well, I think that if you look at the rates and you think that the people where people are at, it's stabilization, right? So I think people need to stabilize mentally. What they're saying is this, and this is my opinion, is since June, the bond has gone up, which has an inverse relationship to rates,
Right.
which rates have come down. So that means that the 10-year Treasury has come down. It's down almost, I think it's down a full point now. I feel we stabilized. I feel that we're going to see this same rate, that 5 to 5.5, maybe closer to 6, but I'm going to say 5.5 to 5, probably heading into 2023 first quarter, and maybe longer. Again, this is more of like just looking at the information, seeing how things are flowing and what people are doing. And I feel that with the Fed looking at the inflation numbers, like you said, with the unemployment, which is very high, that's another thing people don't understand is they may have to raise the Fed's fund rate again if unemployment stays very, very low.
Right.
Because that's also an alarming thing. That means that businesses are still spending, employees. It has to be a balance, right? Or they have to have that.
So you
that
feel
flow.
the rate's going to stabilize where it is right about here, like
I feel
5.5,
we've
maybe
plateaued.
6, maybe 6.5 on the high side.
Yeah, I feel we plateaued.
So-
now again, that doesn't mean it's going to change in 3 or 4 months.
Yeah, that's just what you feel.
That's where I'm seeing.
So
it
you
today.
asked us what our opinion is. My opinion is I go to people who do it for a living, which is you, and I would ask you. So based with that, I would say here's a little tip for everyone too, which is since it's a lot more conducive for a buyer's market right now, write an offering to asking the seller to pay some of your closing costs, and more importantly, to buy down your rate.
They're open to that.
So now you're at 5.5%, but you have the seller buy down a point. Now you're at 4.5%.
Right.
Yeah, I mean, and here's the
There you
thing.
go.
I wrote an offer on this, and then they countered and said, hey, you know what? We're not going to give you the full 3%, but maybe we'll give you half, right?
Yeah.
Hey, you know what?
It's all negotiations
It's
at
all
this point.
negotiation. Everything's on the table.
You have
now.
good negotiating position right now than you have in a long time.
So we went out to a builder. I did a builder walkthrough, right? And they have properties, and Brett and I did them the same. And it's over at Rainbow Crossing. So they have like 3 standing inventory. Yep. The Juliet, they had the Pierce, went through it.
2 Juliets and a
2
Pierce.
Juliets, right? Go through it, and all the upgrade costs that you see, they had a slashing, right? One of them was $35,000 drop on flooring.
Dude, one of
Right.
them was at $910. They've dropped it down to $845.
Yeah.
And it has $65,000 in flooring.
Yes.
Are they?
And they're offering 6% buyer's closing costs. So they'll pay all the buyer's closing costs and then another 3% to like buy down your rate and do whatever the hell you want.
Oh, wow.
And they said that there are any reasonable offers they'll entertain.
Okay.
So
I was up in I was up in Sky Canyon yesterday, and I saw it was in a community that was probably about 1.5 years or 2 years old up in there, and I saw on the sales sign it said the lock in the rate. They're all locking in the rate, moving quick, that kind of thing. So,
Well, here's the
so
thing
are
about
they-
that. So
Okay.
to kind of counter that, which
Okay.
is a great input. Would you have something else to say about it?
I don't know what the whole aspect of that is, but it looks
to
to
use a
me
lender.
like used to use
you have to use a builder's lender.
Okay, so they want you to lock in a rate which is probably low right now. I guess that's my thinking based on what you just said, or lower. But they're having you lock in a rate and move in
Because the house will be completed within 60 days.
It was already done.
No, there you go.
These were already done.
There you go. So
Here's what it comes down to: is the margins are not there for builders now. They overbuilt on just in this market, but they're not going to continue to overbuild. See, the problem is nobody has an idea or crystal ball like, hey, this is when the market's really going to hit its peak and we're going to start to go down. It's you put out as much inventory and you go as fast in your margins and your profit margins and everything. And then once you get to that point, you halt everything. Just like lenders, mortgage lenders and companies, they're laying off everybody, right? It's because they've overstaffed. Same thing with builders. They overbuilt at that period.
Right.
The problem is if you continue to hold on to those employees, if you can't afford
It's
it.
not
or
cost effective.
It's not cost effective. Or you continue to build.
you hire them while you need them, and then when you don't, it's
business.
So,
Exactly. So I know for a fact that there's companies out there selling that, hey, you know what, we'll lock your rate in for 30, 60, 90, 120 days, and that way you're protected. Well, there's a good and bad to that, right? Now you lock in, what if the rates come down? Are they gonna do a float down and give you the better rate at that point, right? I mean, these are the questions that you need to be asking, because yes, it might be conducive to say, hey, I'm going to go into a builder and I'm going to say, hey, I'm going to get the rate and I'm going to get these closing costs, everything, because it's a 30 days out, right, or 60 days out. But what if you're that person out there that's in this market and you're 6 months out, 8 months out?
Right.
What do you do at that point, right? I mean, what do you advise in that situation? Or do you even advise?
If you're 6 to 8 months out?
Yeah, like if you had a client come to you and say, hey, should I lock, like, 'cause they do. Look, a client comes to a real estate agent for all facets
Yeah, I know.
of getting information. It's not just lending.
Dude, they ask me lending questions all the time.
It's CPA questions. Should I get an attorney?
And
Should I do this?
questions,
Yeah,
Any
it's
attorney questions. I said,
appraisal
dude,
questions.
talk to an attorney. I'm not an attorney. That's the first thing I say.
So that's the thing, though, is that you get all these people you're now an advisor for these people,
Right?
And you emotionally have to go through this process with them, and they're in it like, hey, you know what? I locked in my rate. Should I lock in at 6 months? Should I put myself in that position where I'm under the gun, right? Where now I'm in that rate because
How long can they lock in for, Dan?
Depends on what the investor wants to give you. 6 months, 12 months. But
Okay.
what if the rates come down and then they miss the boat, right? They miss. Okay, wait, rates come down to 4.5%.
So
How
much does it cost them to unlock it?
Well, here's
They pay to have it locked in.
here's what typically happens
then if it
with
comes down,
lenders,
okay.
just from experience.
Tell me how it happens.
So you have to lock, and
Okay.
if it comes down a certain margin, you pay a small fee, but
Mm-hmm.
you can do a float down to a certain point. Okay, great. But if it doesn't do that, and let's say, what if it drops a full point, and then you were just advised to go lock, or they locked in for you? Now you have to let the markets dictate that, where if you let it expire, or if you back out and unlock your rate, now you're taking worse position. No lender's just going to say, hey, we're going to let you drop out. Like, what's the point? They're securing that money for you to sell to these government sanctions, right? So you have to understand what you're really getting into and what the costs are involved. But I think with builders, they've built so much and they just want to get rid of the inventory that they have, that they're really just looking at, like, how do I get the most amount of profit, even if it's a small profit, to move this off my books, and let's move on.
At this point, I don't care about levels of greed. I just need to balance my books, basically, and that's what they're doing right now.
That's what a lot of
where
businesses
you can negotiate.
do.
Yeah,
I mean, even on the employment side,
absolutely.
You know, they'll take a $5 profit over a $5 loss any day of the week.
Kind of like a bird in hand's better than two in the bush, right?
Yeah. Right.
There you go.
Back in Wisconsin, we used to.
So going back to it, look, I feel we've plateaued, right? Oh, Wisconsin, did you say that? Say it again. I didn't hear it.
Just so you know,
They had
I'm
an
from
old
Wisconsin.
saying back in Wisconsin.
Just so you know, I'm from Wisconsin.
Okay, so listen.
Sorry, continue forward.
Hold on. I felt weird last week because I don't think you brought up Wisconsin, and I wanted to bring that up,
Bro.
for the first time.
My
but
bad.
I have to go
My
and
bad.
reevaluate because I think Wisconsin
Won't happen again.
Wisco, baby.
Wisco, baby.
No, you're a
Wisco.
cheesehead.
Cheesehead.
You need to come into with a cheesehead.
Did you see Aaron Rodgers walk into practice?
Yeah, he looked like Nicolas
Nicolas Cage, bro. Did you see him?
No, I didn't.
Comes walking. He's got the white beater on. He's like slick back hair.
Oh yeah,
That's our leader, man.
Nice.
Leader? Is he a leader of
Dude,
men
he's full redneck. You can tell he's been there for 10 years.
from California?
That's what we do to California people, man.
That's good.
So anyways, you guys have any other input on what's going on with rates? And like, where do you see this? I feel like I said we've plateaued. I know everybody wants to think, well, it's still going to keep going up. There's data. Let's be honest. How many people are really in the trenches looking at this data? I'm not saying there's not people out there. I think there's very savvy tech people out there that are doing and monitoring this stuff, checking in on
my
it every
personal
week.
opinion, I don't think it's going to fluctuate much from here on into November.
No. You?
I agree 100%.
All right. Well, let's keep moving. I want to talk with Brett over here about what's happening in the markets and give us some insight about what's happening with some of the data. I got this graph over here.
Let's
If you guys want to also, I want to show this to you really quick. If you guys are looking for a home, this is a great place to get started, right? This is a website. This is my website, LV Home Professionals. You guys can jump on here. You can hit in here 3 bedrooms, two bedrooms. Let's just put 3. Now, the thing is that you're going to see what I see when we go through this market search. Let's go from 400,000 all the way up to, let's say, 700,000 real quick. And then, Brett, I'll let you kind of jump in as you're getting set up on this. So we found 4,000 homes in Clark County. Let's go to Las Vegas. That's a little bit high. Let's see what we got here. So reduced. Look at
Those
this.
are rents, though, dude.
Huh? No. These are homes that are selling for 700,000, and it's $3,000 payment.
There you go.
But look at all these price reductions. I mean, you're looking at price reduction. wow, we have a foreclosure, right? So you click on this information. Let's just click on this house right here. And you're gonna have to register because something's gonna pop up here. I guarantee that.
I like that kitchen.
Yeah, but look, you could get all this information coming on here, and people, you're gonna have to register for this. So look, I understand that you don't want to put your information. We're not gonna harass you. I'm just gonna call you 6 or 7 times a day. That's about it.
That's right.
No, but anyways, I want you guys to really take a look at this website. So let's go over here. This is LB Home Professionals. This is a great place to get started. Let's go over and take a look at what's happening. And you want to take this over, Brett? I'll let you kind of take over.
Well,
here,
let
buddy.
me start with the basics.
You got something going on?
Before we do that, yeah.
All right,
so we now have 16.1 weeks supply.
Wow.
On the market. So we're now just over 4 months.
Yeah. That
so
went
what?
quick.
4 months ago, we were less than a month?
Yeah, I went quick.
And now,
yeah,
we're like, we need more homes to come on the market.
Okay, here you go. Is this enough? You want more?
Higher prices, higher rates. You'll have what you want.
Yeah, that's what I'm saying. So, all right. Last week there were 520 that received accepted offers, and there were 438 that actually sold. So active listings on the market right now are 7,040. The most expensive home, in case anybody wants to know, the most expensive home last week sold was $5.4 million.
Wow.
The average weekly sales price was $541,397.
Wow.
$97?
$97.
So let's go over here. I want to bring this up real quick. So let's talk about, so sales price. So I'm looking at this right now, and everybody knows I'm going to be squinting here in a second. So the average sales price on a home, let's do all properties, right? So all properties is $523. Single family residence, is that the average sales price? Let's take a look at this really quick. That's monthly, right? So I want to take a look at, pending home sales. Okay. So we have 2,131 days on the market. Okay. So is this accurate, Brett? This is what I want to ask you. Is this accurate? Because look at the average days on the market is actually 17. So you look at 17 days on the market.
Yeah,
here.
wait till July comes out.
Well, I know you said it's going up, which
it's going to be probably at least over 30 days, I would say.
Which it is, right?
Yeah.
And then you also have to look at the month's supply, which we're at 2.3 months.
Look at that, almost a straight line up, man.
76% increase.
If that was a stock, I would love to own it.
Oh, yeah.
Look at that. That is just insane, isn't it? So you got new listings coming on the market.
Dude.
We have 5,000 new listings on the market. That's up 22%, right? And homes for sale. People, look at that. 54% increase on homes for sale in June. Isn't that insane? And that, if you want to go the whole enchilada, that's all the properties.
That's what.
This is all the properties.
This is what, February or March?
Yeah, this right here is March. So since March,
almost
look at
doubled.
this. Yeah, it's almost doubled. 45%
Yeah.
right here increase.
Yeah.
9,000 homes
That's
on the
what
market.
we needed, man. I mean,
New
that's
listings.
what we needed.
New listings. Overall, this is all property types. This is not just one property
Mm-hmm.
type. You have 6,703 homes on the market. Sales price, okay. Let's take a look. I want to see single family residence is, let's look at the median. I want to look at the median. So everybody says there's the median. Everybody talks about the median sales price. Well, if you go back a week, we're really at like 469. So we've seen a small decline. If you're going the last 7 days, this number is not 480. This is like this is always a little bit behind because you can really just go week to week.
We're a full 30 days above in front of us.
You can go week to week, but I mean, you're looking at this information, and I mean, this is saying, look, if you're out there and you're looking to buy a home, and you're trying to buy a condo, a townhome, or you're just in the market, you might have been pushed out of buying a single-family residence home. And with this data, this might push you back into buying a single-family residence home.
Save yourself the $350 HOA.
Well,
I've been doing the condos now, and I've seen them come up. You know, like when I go put the information into my platform, they're coming up 185 to 200 to 220, and before you couldn't find anything less than 250.
Yeah.
So they are coming down. I mean, they're not. You know, you're not up in Anthem or Seven Hills or whatever, but they're still condos that are available for like 185, and they're nice. I mean, they're not bad.
Yeah, and the attraction is the people that were not going to buy or couldn't buy or the rates were too high. We've plateaued, I feel, on rates. And this is not a sales thing. This is data that I'm seeing. That doesn't mean it's going to change or couldn't change in the next 90 days. but it's pushing those buyers back into buying single-family residence home. You don't have to force to buy a townhome or condo, right? Would you agree?
Absolutely.
Yeah.
And a kind of off topic, but on topic, to kind of give people an idea of where the housing market was 10 plus years ago when it crashed. I was looking at a property. I was doing comps on it last night, and the property was selling for like $165 a square foot, which was average for its neighborhood. It was on the east side, more north, stuff like that, right?
Right.
Selling $165 a square foot. I was checking the history of it. It sold in 2011 for $33 a square foot.
Oh my!
Really?
Wow.
$33 a square
2011.
foot. 2011, yeah. The house sold for like, I think it was like $55,000 or $60,000.
Wow.
I mean, it was absolutely insane. It was like, I remember $33 a square foot. So to give people kind of idea, that's a crash.
Yeah.
I mean,
Well, I don't know if it's a crash. I don't want to get misinterpreted here. I don't think that's a crash. I just think that the market dictates.
Then?
Yeah, then the market dictates, just like you said and I said.
Yeah, the market dictated a crash.
The market dictates what people are willing to buy for the home, right?
Absolutely.
And that's what happened.
And that's why I say is like, how much is something worth? What someone's willing to pay? No more, no less.
See,
you know?
that might have been okay. That might have been something too, because there were venture capitalists out there that were coming in. Like all the homes that I was doing back in that time were owned by some hedge fund company or venture.
You remember they could come in and buy
whatever.
blocks?
And that's what they did.
You
was
could
they
buy 100
blocks.
to 200 home blocks.
So I think what they were doing at that point, because I was doing a lot of homes that were like $50,000, $60,000, $70,000, and I think what they did was they drove the prices down so they could get their hands into a blocks of from the banks, and I think that's part of where that $33 was. The $33.
Yeah,
a
I
square
mean,
foot.
so just so people kind of
But
understood.
I don't think the same thing. I don't think the same scenario is going here, because I just saw the other day.
Oh, it's
where
not. It's not. It's completely different. That was my whole point, which is you want to know the contrast of what the deep really is. The deep that was.
Well, I mean, and I guess BlackRock is a big real estate investment company.
Yes.
Okay, so they just posted losses of $1.7 trillion, right?
Yeah, but you still have people like
Billion or
investors
trillion?
buying.
But what I'm saying is the hedge fund companies aren't coming in to drive down the prices because they're losing money on that kind of stuff.
I think the hedge
Is that
fund
right?
investors. I
They're
think
selling
there's
their
a part
equity
of
and
it.
buying more.
Here's the thing: they're storing their money. Period.
Yes.
I think that when you're buying into assets like this, it's more of like, okay, we know that there's an unstable market. There's unstable positions that where you can put your money in different. Look at crypto. We're gonna Brett brought up. It's very volatile. So what does a housing market do? Yes, it's going to come down, but for overall, people still need shelter.
So I'm saying, where else are you going to park your money?
That's the question.
Exactly.
It's not such
exactly.
exactly.
I'm just saying that they're not. I don't think the manipulation or they're driving.
It's not
the big. Yeah.
So I got a question here on this that I want to bring up. So it says, James Hughes says, what's the best time to buy a home? Say any realtor. You can answer it. I'll answer that after that.
My answer is whenever it works best, whenever you can. Whenever it works best for your situation. If now's a good time to buy and it works for your situation and you're going to live in the house 3 to 4 or 5 years minimum, then now would be a great time to buy. If it's something where you're only going to be here for a little bit or you're unsure of what the future is going to be and you just feel a little bit nervous about it, then just rent.
Yeah, for me, I would say this. I would say that you're going to have a lot of biased answers in some ways, right? As a real estate
Absolutely.
agent.
Everybody has
So
a reason for their opinion.
Here's what I say is like, just like when you say, I watch data or I'm out there looking at it, mentally you have to be ready. This is a commitment. It's a marriage. It doesn't matter where you're at, what time. Is it the best time to buy a house? No, it's not. I mean, you still have higher rates than we used to have. Yeah. You still have homes that are still up double digits across the country as far as prices.
When would be a good time?
It's like this. If you look at the market and you say, well, do I need a place to stay because there's a reason for me to be there? And then I'll look at and compare it to if I had to rent. Like if I'm single and I'm out there and I can rent a house or a room for $500, $700, okay, maybe I don't buy a house because I'm just not, it's not a necessity, right? It's not something that I go all in on. Now, if you're somebody out there that has a family and you need the space, you need a place to harbor your family, right? Shelter. Then I'm going to compare what the rents are going for a house compared to what the price of a home is if I need a mortgage. And then I'm going to make a decision on, well, okay, it might not be the best time. It's not. But markets always come down and they come back up, right? Just like you said, your person said that in any market, every time that you've had a house, doesn't matter if you paid what you paid for it, you've always sold it for a profit if you know what you're doing, right?
Here's another perspective as well, which is, okay, if you don't buy, then you rent, right? And say you rent versus buy because you have a fear that the housing market's going to come down some more. So let's say that, your $2,000, let's say that your $3,000 mortgage payment now with the value of your house should realistically only be a $2,500 payment because your house value went down.
Right.
But you're still making $3,000 a month payments. If you're renting, and say you're even renting at $2,000 a month, you're still giving up $2,000 more every month to someone else's mortgage than your own. And so even if home prices come down, that's still you're still gaining over renting, which is giving it all to somebody else.
See, and
correct.
When the housing market stays stable, then that's a more comfort zone factor for people who are renting because you're not going to be booted out next year.
I would
at
say
the end
if you
of the
have
contract
if you have a
because the
situation
owner
where
wants
you're
to sell the
unsure of your
property.
future, I'm sorry. Go ahead.
That's right.
I would say if you it depends on what your situation is, right? If you're young, you don't know if you're going to be here long, you don't know exactly sure what your future is, and you want to wait a little bit because you just feel that right now is not the time to buy, then you're young. You have plenty of time to do it. Or if you're older and you think you're going to be bailing out of town soon, or you're unsure of what your job's going to be, it depends what your situation is. If you're in a position where you can buy and you want to buy, then I think you should buy. Because I think that long term, you're going to come out on the winning end.
Okay, so and I agree with that. And I'm going to go back. What were you saying, Doug? Go ahead and just.
I was just saying, when the prices are stable or the prices of the homes go down, if you're renting, there's a lot more comfort zone factor in there because the owners aren't going to sell the house out from underneath you, and then you don't have to come up with a scenario with moving once a year because you're trying to find something that's lower. So I think for renting, renters should be looking at the housing market just to see where it's at. If the prices are going to go up, then maybe it is a time to buy because you may be getting sold. The house may be getting sold out from underneath you in a year's time anyway.
I just think people too, they're worried about the crash or worried about because look, a lot of people that are watching the news or watch what's going on. Many people that are buying today went through or saw their family go through the crisis of 2002
I get it, dude.
and 5.
Yeah, I get it.
That's always looming in the back of their mind. Like, well, would this happen again?
Right.
And if it happens again, can I be ready?
Fool me once, right?
Yeah, and then should I pull my money back? Because I don't know. I think that was a one-off. That was like a recession a real true recession. The one that they had was like 70 years. I think that was like the real one.
It's like once every 80 years or something like that.
And the thing is it was a credit boom, right? We don't have that today, right? That was contributed by mortgages, so we don't have it. So I think looking at that, you have to have the confidence in the economy, right? And there's a lot of stuff out there that people don't need to probably watch because I think it puts a negative mindset. Fear. But again, it's going to be case by case. I'm always willing to take a risk and pay myself forward. So let's get and move on from that question. Doug, I want to talk to you about what's going on here. And so you're talking about weather, man. It's been raining like cats and dogs.
You been getting wet out there, man?
Oh, yeah, a little bit.
Yeah?
Yeah. Gets a little tricky on the roof sometimes.
You getting flooded anywhere? Waiting in traffic? How the stoplights will fill up in 3 minutes?
Actually, I had to go to Pahrump earlier this week, Monday or Tuesday. I can't remember what it was. It started raining at Fort Apache, and it rained all the way over the hill. Then it rained into Pahrump. It followed me into Pahrump. Then it rained all the way back. And then when I got back into Vegas on the west side, because the west side always has that tendency to flood, right?
Yeah.
And I came back on the west side, and people are driving through their rivers,
Yeah.
And so it's been weather's been pretty.
It's been different, right?
Pretty cool, actually.
Yeah, it's
as
weird
long as it doesn't do any destructive. I mean but it does. And in homes, the thing is you got to kind of. During this time that we like the monsoon season that we have, look for things around the house. Look for leaks in your windows, leaks in the roofs, stains in your ceiling.
The leaks are where the water's coming in.
Yeah, right, Brett.
Sorry.
God, I need
I'm
an
about ready
assistant.
to start my own home.
I need an
home
assistant,
inspecting
man.
business.
There's water leaking on your head.
Can you tell that I did construction for 6 months?
Yeah.
For 3 months in this.
But you're saying
summer.
when you look at this, you're saying that now the things that come out that because look, this is a very dry area, right?
Yeah.
Las Vegas is like you're not going to see all these little blips or problems that you have with a house until you get rain.
Right.
And I think it's been 4 years since we had rain.
Yeah, something like that.
So, yeah, right. Exactly, something like
Seems
that.
Seems like it. But I mean, this is a good time, and then look at look at the roofs, look at where your roof drains and stuff, and see if the water's actually coming off your roof. Because if that's not the case, then you've got some plugged up drains on your roof. Because your roof is actually designed to drain into the valleys on the roof, and if you've got if it's coming up over the top of the tile, then it's you probably want to get your the valley gutters cleaned on the roof. And the other thing is with the humidity that we have here, and I noticed this because I just noticed this in my place, is I got a couple windows that we call it sweating or condensating.
On the inside?
Wow. On the inside of the windows, right? So it's not necessarily a leak, but what it does is it builds up condensation between the window panes, and then it basically you've lost your seal in the windows, and then eventually.
So what causes that?
Just losing the seal in the window.
So you got to get it recocked.
No, you got to replace it.
Oh.
Yeah.
I thought you were going to cock it or something.
Caulk usually fixes everything.
Yeah. Duct tape and baling wire, right?
But you got to get it resealed then, right?
No, you just have to replace it.
Completely replace it altogether.
Yeah, because you're not going to seal it because those window panes come as a unit. It's aside from all the technicals, the window pane comes as a unit. You put the window pane in, and then it should be sealed up from the factory.
So you got to replace the window itself.
The window itself.
Wow.
Yeah.
So what do you do with that window if
For
it's
the
not broken?
condensation inside?
Yeah, if there's condensation inside.
Replace the whole window.
Yeah, replace the whole window.
What do you do with the
Couldn't
window
you
that
just
you
use
have,
caulk?
though? You said it fixes everything.
It fixes everything.
What's that?
He said caulking fixes everything.
That's what she said.
Cock fixes everything? Yeah.
Okay.
Yeah.
But I mean, what do you do with that window? If you have a perfectly fine window, can you take it and refurbish it? I thought you would be able to fix it or something. You can't do that.
You can leave the frame there. You can leave the frame there and just replace the window. So you don't have to pull the whole window frame and everything else out.
So just take out the glass, give it a timeout in the corner, and put it back in.
Yeah, and usually, it depends on what the size of the window is. It could be anywhere between $150 to $600, $700. But it's one of those things where eventually that condensation will build up inside the window pane, and then you just got this white thing that you're looking at.
Yeah, I've seen that in plenty of homes.
So
it's the size and the caulking is really what it does, right?
Yeah.
Right, Brett?
You tell me, Dan. You tell me, Mr. California.
Brett over here is a fudge packer. I mean, a cheesehead.
Peg.
He's a Packers fan.
So,
Dan's a peg leg.
Right. So anyways, let's go back.
The weather does. I mean, during this time, there's things you can be looking at around your house and make sure, the other thing is a lot of times there's no seal around the bottom of your garage door.
Uh-huh.
And then all of a sudden you got a puddle inside your garage door. And that's just a matter of replacing the weather seal on the bottom of the garage door. And then,
so how would somebody identify this? I mean, because look, if I have a house, I can identify it because just, you got a storm coming through your window. So it's like, oh, yeah, I feel it. There's an issue somewhere.
Yeah. How
do you check that? Do you go around the house and check that prior to the storm happening?
Well, it's kind of hard. I would say, you're going to, the proof is in the pudding, it's going to be.
Gotta wait for the storm.
Yeah, if you're going to, if you got water coming in the window.
Guess what? Guess what? You got a leak.
Try to mitigate it as best as possible. I mean, it's.
Hey, what's so funny is I don't want to bring this up because I know that Doug had, we brought him up about like how these girls hit on him, but he shows up at the door and he goes, "Never fear, the caulking man is here."
Dan, you should write porn scripts because he's pretty detailed about coming up with different scenarios with Doug and the handyman and
Doug
porn.
shows up with a hard hat. He's ready. He's like, "The caulking man is here."
I'm telling you, man, this town is
Dan, are you from
probably
Van Nuys?
unlike.
Van Nuys, baby.
Oh man, let's get off topic here, man. We got a little bit
All
over.
right.
We're going a little too much.
Yeah,
So anyways,
this town is unlike most.
Yeah, it is, right? I mean,
Oh,
let's
yeah.
not get into those details. Your wife's going to
No.
divorce you. You're going to
I
not
know.
come back next week. You're going to be
I
like, I don't have a
I'll be
feeling.
like,
I don't
"God
want to
damn
lose
it,
you, man.
Dan."
I need you as a co-host. So, but anyways, anything else? Let's talk a little bit real quick on how somebody can get your services. Like, where does somebody get started? Because I think that a lot of people don't really know what you do. They do, but
Yeah, I primarily do home inspections. My background is engineering. So I was in the engineering field for years, and then I started a home inspection business, and I enjoy it. The thing is I enjoy going through a home, and I still do after 22 years, just going in and kind of like, I got this analytical mind, right? I just kind of go through and what if kind of thing. And I enjoy going through the homes and seeing what some of it is a forensic type of evaluation on a home, because
Yeah.
everybody always asks.
You're a house detective.
Yeah, you're a house detective, right? And so people ask, where does that stain come from? I'm like, I don't know, And so then I kind of look at it, and as I go through around the house, and sometimes I find it. Sometimes I find where it came from.
Yeah.
Sometimes I don't. But my background with the engineering side, I think lends a lot of credibility to the like your foundations and the house, and then the types of construction and how things were constructed, and knowing how things were put into place and built and all that stuff. I think lends a lot of
Yeah, absolutely.
but they can get a hold of me at I have a cell phone, and I got a website 702
thank God you do, man, because there's a lot of people out there.
806-5280.
They just like, hey man, pass my information. It's like, oh yeah, what's your website? I don't know. What's the website?
702 Doug's House of Love.
Doug, is that a secret website over there, Doug?
No, it's www.lvhomeinspections.com.
So anyways, you guys are looking out there for a home inspector. Doug is top notch, and you guys, I want to say thank you guys for tuning in. This is going to end the show. Again, LV Home Professionals, check us out. I want to say thank you guys all here for the comments. You guys have a great weekend. We have a lot of things. You got something going on, right? Are you going to go show homes after this?
No, I was going to, but my buyer got COVID.
Oh, that's right. You were telling me about that.
After 2 shots and a booster.
Yeah.
We're not going to bring that up.
Nice.
That's a whole other show. But
If you guys have any questions, leave them in the comment section. Also, in the comment section, I have a link to, if you guys are looking to list your house and you guys want to get a price on that, if you guys are looking for open houses, if you're looking for reduced sales, also move-in ready homes. All of this is in the comment section. Coming soon. All in the comment section. We've really allocated over a week-to-week basis of information that's out there. I understand everybody, it's not the glamorous thing right now to buy a house, but I'll tell you what, it's still, if you need to buy a house, we're going to be your resource. I'm a go-to realtor here in Las Vegas. So is Brett, Jenny. Guys, thank you so much, Doug,
You're
for
welcome.
being on the show. Coming
Thanks
in
for having me.
Doogie, also Brett, BJ. See you guys at the next one, which is on Tuesday.
I won't be on it. Don't watch it.
You're not going to grace the presence.